What's up, folks? What's up, folks? Happy Christmas Eve to everyone. Happy Christmas Eve to everyone in the building. Happy Christmas Eve and a Merry Christmas to every one of you guys. So I got a quick story I want to tell you guys. So I don't want anyone to make this type of financial mistake. Don't want anyone to make this type of financial mistake because I think it's huge. And I wanted to talk about this tonight, but I was like, I want to tell individuals about this because people cannot afford to make this type of mistake. So, got a colleague of mine who is leaving our company. Um, she's not leaving by choice. Kind of being pushed out the company, but I'm not going to get into that because there's still some um, things happening with that I can't discuss. Um, but her travel center is being remodeled, and so I was over there helping out last week, set up for the reopen because they're getting remodeled. And what's up? What's up? How you guys doing in the chat? How you guys doing? I appreciate you guys stopping in. So she was she's leaving the company. So I was there a week ago helping set up the travel stop for the so they could reopen. And we were sitting down talking, and I was asking her how she was going to be doing financially. Like how how are you going to be financially with you leaving work, quitting the company, and things of that nature. And she was like, I'm going to be okay. Hopefully, I'm going to be okay. And so I didn't want to just ask her too much about her financial situation, but I know she doesn't save money and she lives paycheck to paycheck. So so I asked her. I said, whatever you do not cash out your 401k. Do not cash out your 401k no matter what you do. And she said, I'm not in the 401k. And I was like, huh? Come again? What did you just say? You're not in the 401k? Are you serious? She was like, yeah, you never asked me about that. I'm like, you are a grown woman. Why should I have to ask you about that? I just thought you would be in the company's 401k. And I asked her, I said, how long you been with the company? She's been with our company for 8 years. 8 years. And she's not in the company's 401k. So I said, and we just really got close because when I left my previous travel stop, I transferred out, she transferred in. And I was like, so you've been with the company for how long? She said 8 years. You okay, buddy? And I said, so you've been with the company for 8 years and you're not in our 401k. I said, did you know how much money you have left on the table? Do you know? Yeah, Blaze didn't just peanut butter and was good. I was like, do you know how much money you have left on the table in 8 years? Because our company matches dollar for dollar up to the first 5% in the 401k. And to put this in context, I've been with the company, guys, for 15 years, right? Been in the 401k since day one. This year alone, I just looked at it, just looked at my check stub year to date because the company matches our pay, they matches our company matching our bonuses. And if you happen to be over the company 10 years like I am, we get yearly profit sharing. They match that. And of course they match your normal paycheck. And this year alone, the company has put in $8,000 for me in matches. Company match. $100,000 is what the company has matched me this year in our 401k. You can't you can't leave free money on the table. You cannot leave free money on the table. If your company matches your 401k, you need to be in that 401k. You can't afford not to be. That is free money. That is free money to you. Don't give that money back to the company and let them have that money. Don't do that. I couldn't believe she was, and again, this is why I've said before. Sometimes it doesn't matter an individual's intelligence, how smart they are, but she's a smart lady. She's an intelligent individual, but she has no clue how money works. None whatsoever. None whatsoever. And she's been with the company for 8 years and never joined the 401k, never signed up for it. I was just kind of in disbelief. I was kind of mad at her for doing that. I'm like, how could you be that financially irresponsible to not, how could you do that? And then she's like, oh, you never asked me about it. I should have to ask you about that. You're a grown individual. You are a smart, intelligent individual. Why should I have to ask you about your 401k? That's not my responsibility. I mean, she's 40 years old, leaving the company. Like I said, she's kind of being forced out. And I was worried about her just cashing out the 401k. I'm like, do not cash out your 401k. Make sure you roll it over into an IRA. I will help you do this, because we have become cool over the last few years. I will help you do this. And she says, I'm not in the 401k. I'm like, you have got to be. How are you just going to leave free money on the table like that? Well, you don't have to worry about cashing it out because you don't have one anyways. I was just blown away. Because actually, guys, because my company is the first company I ever worked for that actually had a 401k, and it took me 38 years to want to work for a company with a 401k. I started with my company when I was 38. So it took me to the age of 38 to even work for a company that offered a 401k. And here we are, have individuals where we have a 401k, a match up to dollar for dollar, match up to the first 5%, and you're leaving free money on the damn table. It's just so irresponsible to me. So irresponsible. But I mean, it is what it is. I mean, these individuals are grown, they make their own financial decisions. I mean, there's nothing I can tell them. She gonna say, You never asked me about it." Are you a grown adult? But yeah, I just wanted to tell you guys that because man, you just cannot leave free money on the table. If a company offers a 401k, make sure you get in that 401k and get that free money. You can't afford not to. You can't afford not to, guys. You can't afford not to. Let me read this question in chat. What is your view of the hardest part about investing? What do people get wrong about it? So I'm answering this question from, I'm kind of blind, even though I got glasses on. BS spinning 37. I'm kind of blind, even though, like, if I take my glasses off, guys, I can't even see myself on the screen. That's how blind I am. I'm dead serious. All I see is a blur. I can't even read this lions on my hoodie. I'm that blind. I take my glasses off. Blind as a bat. So that's a good question. So I'm gonna tell you the hardest part about investing with individuals is to stay this part about investing because people get scared and they jump out. Most individuals that I talk to and they say, and I ask them, well, why don't you invest anymore? They say, well, the market dropped and I got out. That's where individuals go wrong. So let me give you some guys some numbers with me. So I opened my Roth before I started with my company. I had my Roth since I was 36. I just looked at, I think it was, I've had my Roth IRA with Vanguard since I was 36. So 17 years. I'll be 54 in March. 17 years. Right now, my returns, my average return for my Roth IRA right now is 14.1%. That is a excellent, excellent return. If you do to 10%, you are doing awesome. And I'm not saying that's been every year. That's over the last 17 years. My Roth IRA is at 14.1% returns annualized over the last 17 years. I've been in my work 401k for 15 years. And I just looked that up. And over the last 15 years, my work 401k is at 13.22% over the last 15 years. And that, like I said, that's not every year return. It's not every year, but annualized over the last 15 years, 13.22%. If you're getting 8 to 10% compounded yearly, that's an excellent, excellent return. But guess what, guys? If I was jumping in and out, I wouldn't have that type of return. I would not have the type of return. I have rolled out every when I first started investing, it was right after the 2008, 2009 financial crisis. The first year I started investing was when I opened up my Roth. Most people would have got out. That first year, the market was down like 8%. And most people would have been like, this don't work, this is bull crap, this is a scam, and would have got out. I've stayed the course. I've rode out COVID, high inflation, market having menial low returns after the financial crisis and recession 2008 2009. I wrote out all of that. This year, Liberation Day, I wrote it all out. Wrote it all out. I've never taken any loans out of my 401k, never taken any money out of my Roth. It's been steady investing over the last 17 years in my Roth, the last 15 years in my 401k. The bulk of my net worth is in my work 401k and in my Roth IRA because I've like the author Psychology of Money, Morgan Housel. You make your money by being in the market for the long haul, the endurance, the long haul, not 1 years, 2 years, 5 years, 10 years. You make your money in the market by being invested for the long haul. And like he says, the price you pay for admission for great returns is staying put during all the turbulence and just riding all that out. Have I got nervous sometimes and wanted to put my money out? Yeah, I've got nervous, especially during COVID when the market dropped like 35% because we didn't know this was all new. COVID was new. We didn't know what the market was going to really do. We didn't know if everybody was going to die. We didn't know. It was all new. It was new to the world, the whole COVID situation. But then as things start to settle down, the market bounced back within a month and a half onto new highs. So when it comes to investing, you got to have nerves of steel. That's all I can tell you. You got to have nerves of steel. You got to have nerves of steel. When Liberation Day, everybody know Liberation Day when Trump announced all the tariffs. I lost a combined about $60,000 in both of my accounts within a week, but I didn't panic. I said, you know what? This is expected. The market doesn't like uncertainty. That's one thing about the stock market. The stock market likes to know what's going on, but when you do your research, you know this. The market doesn't like uncertainty. The market likes to know what's going on. And when he comes out and announces all these tariffs, that was kind of like that kind of spooked the market. So the market dropped. But then within a couple of weeks, the market is back up to record highs. So when it comes to investing, I'd say the hardest part, in my opinion, is staying invested no matter what economic conditions that are being feared right now. Like right now, tariffs are still being feared. You know, consumers are still not confident with the economy right now. Um, Consumer sentiment is really low, but we just had a over almost a 4% GDP increase. How does that happen with all the doom and gloom? How does that happen? We have a GDP almost hit 4% gross domestic product, but we have all this doom and gloom out here in the economy. But the market anticipates what's going on in the future, not what's going on now. Again, when people studying the market, that's what the market says. That the market is not paying attention to what's going to be going on a year from now, 5 years from now, 10 years from now. That outlook, but that's like I said, that's to me is the hardest part about being invested into the stock market and staying invested is when you have doom and gloom and the market drops. Like for instance, every 2 years there's a market correction. The market is going to correct about every 2 years, which means the market is going to reset itself. And it's usually about a 10% correction. Most people, if they would study the market, is going to happen. It's going to happen. It's going to be a 10% drop somewhere, sometime in the near future. It's going to happen because it happens every 2 to 2.5, 3 years. The market is going to correct itself and then it's going to go back up. Normally, then it's going to shoot back up to record highs again. That's just how it is. AI, I'm me personally, I'm comfortable with the AI trend. It's going to take some jobs, but companies are also going to be profitable from AI, and AI is going to make a lot of people millionaires. So I'm comfortable with. I don't like the fact that AI is going to put individuals out of jobs. Nature of the business we're in, but it's also going to create millionaires that people individuals that are invested into the AI boom. Like right now, they're anticipating an AI bubble. That bubble is not going to happen, in my opinion. Like kind of like the dot com bubble popping. The AI, I don't think we're going to have a AI bubble anytime soon because AI is still prevalent. AI is still growing. Like right now, they said ChatGPT was supposed to be like a big. Everybody heard of ChatGPT, but they said Gemini is coming up is giving ChatGPT a run for his money because Google is putting a lot of money behind Gemini. So I think AI is going to be it's going to be revolutionary. It's going to put individuals out of jobs, but and that's the sad part. But individuals that are investing into AI companies, if you're in index funds, you're already invested into AI companies. It's gonna it's gonna make some people a lot of damn money. It's gonna make some people a lot of damn money, but it's also gonna put some people out of jobs. But and that's the sad part about it. But there's nothing we can do about it. It's gonna happen, and AI is coming. Just like in our travel stops, well, putting excuse me, um, as we remodel our travel stops and put and build new travel stops, we're putting a lot of automated cashier stations inside of our travel stops. And guess what? Every time we have a remodel and when we build a new travel stop, the amount of labor we get to use comes down. So which means is less hiring we do. But it is what it is. I mean, we can't stop it. We can't stop it. But my end, I invest in index funds. I don't invest in single stocks. All about index funds and index funds. Like my two big hitters is my S&P 500 index at work. And then in my Roth is my total stock market index fund, VTSAX. Those are my big hitters. And that's where the bulk of my wealth is in those two index funds. And one thing I want to say to everybody is that you don't need five, six, seven, eight investments to become financially independent. You don't need that at all. The bulk of my wealth is in two index funds. That's it, two index funds. This year, I got a couple ETFs. I started a couple ETFs at Fidelity, and I got into crypto, but that's kind of like play money. just was play money to me, just taking some more extra money to invest it. Um, but the bulk of my wealth is in index funds, the S&P 500 index and the total stock market index. Guys, every company, every big company out here is in one of those funds. I mean, I don't care if it's Tesla, Amazon, Google, Apple, Home Depot, Walmart. So as long as all these companies are still going strong, we're going to make money. My philosophy is if we wake up one day and there's no longer a stock market, that means there's probably no longer a world. So we got more problems to worry about. But as long as these big companies stay prevalent and they still continue with innovation, and we're going to make money. It's just the bottom line. When we start seeing Walmart fold up, and we start seeing Home Depot fold up, and we see Tesla fold up, and we see Apple fold up, and Amazon fold up, then we probably got some problems. We start seeing McDonald's closing down, but until that happens, I'm going to be in the stock market till the day I die. I'm going to be in the stock market. I mean, because personally, I'm in the financial situation because most of you guys has been following me around. Know I'm a single bachelor. My divorce was finalized in 2023. So it's just been me and my buddy Blaze since 2023. And but a lot of my wealth has just been from long-term investing. Long-term investing. That's why I don't have any money issues. That's why I don't have any money problems because I've been investing for damn near going on 20 years. And it's going to be 30 years and 40 years if I live that long because I'm a true long-term investor. I'm not getting out of the market. It's not going to happen. I mean, I may move once I retire and I'm done working. I may move some things around into less risky assets, but less risky investments, things of that nature. But I'm always be investing into the stock market. Always be investing into the stock market. If you go and you ask them what is your most powerful wealth generator, it's the stock market and real estate. You can't go wrong in either one. You can't. You can't. Ain't that right, Blazo? Ain't that right, Blazo? Say hi to the crowd. Say hi. Hi, everybody. Everybody see your face. I love this fella. I love him. He's a good dog. He's a good dog. Don't bark unless he hears, somebody coming to the door or something like that. He's chill. He's laid back, just a cool companion. Just a cool companion. Don't chew, don't chew on things. He just laid back and he just chill. He just chill. He's a really good dog. And I'm so glad I got him. Actually, my daughter found him for me when she was looking through the local rescue, and his name was Frankie. And I was like, there's no damn way he's gonna keep the name Frankie. I'm changing that shit as soon as I get him home. Because I don't even like the name Frank, to be honest with you. But I'm Frank Jr. But he was not keeping Frankie. Was not happening. So, guys, I'm about to wrap this up. I just wanted to get on here and just tell you guys about my colleague not being into the 401k because that's a horrible mistake. You're just leaving money on the table. Leaving money on the table. The company is in a 401k, and this is take a step back. This is why, guys, when I say paying off debt or investing, that's why I say do both. Me personally, I'm doing both. I did both. Because if you got a company, especially with a 401k, and they're giving you a match, you can't miss out on that free money. I know I believe in a lot of things that Dave Ramsey preaches, but that's one thing I do not agree with. You got to invest and you got to pay down your debt at the same time. You got to figure out a balance with the two because you don't want to miss out on a company match if the company is matching your 401k. You don't want to miss out on that. You just don't. You just don't. So, guys, I'm going to jump off of here. Happy Christmas Eve to everyone. Merry Christmas to all of you guys. I'm not, I'm gonna take a break tomorrow. I'm not gonna post anything tomorrow, no live, no video. I'll probably make some videos tonight, and tomorrow, but I'm not gonna upload any videos tomorrow or do any lives. I'm gonna chill out. I'm gonna chill out tomorrow and just Probably might go visit my grandbabies down in Michigan, my son and his wife and my grandbabies, and just have a relaxing day. So, Merry Christmas to all of you guys. Thank you for all the support on the channel. I wholeheartedly appreciate it. Um, yeah, appreciate each and every one of you for supporting me and supporting the channel. I appreciate it. Merry Christmas to each and every one of you. Enjoy your day tomorrow. Thanks a lot. I appreciate it. FTM Nation, I am out of here. Thanks a lot. Appreciate you guys.